You know what? Most traders are going to lose money in the stock market next week. Not because they're stupid and not because the stock market is going to crash, but because most people fall into the same mistakes that cause 95% of traders to lose money. Now, I'm going to give you a list of some of the common reasons people lose in the market. I want you to be a better trader. I'm going to try to help you with some solutions toward that goal. So let's jump into the list. Most traders lose money, and the reason, of course, is that most traders are emotional human beings, and the sad reality is humans are predisposed to fail in the stock market. So if we look at the first thing on our list here, poor risk management, let's talk about that one first. So every time you take a trade, you should plan to lose, because the reality is there's no trading strategy that is right all of the time. Good traders can make lots of money being right 70% of the time, even 60% of the time, you can be very profitable. But the key toward doing that is to limit the size of your losses. And good risk management is about planning to lose so that when you have to take a loss, it's not a big one. If you have a $100 risk tolerance, if that's what you're comfortable losing, then you take a position size that is going to give you a $100 loss if you're wrong. If you buy too much of the stock and it falls to your stop loss point and you're faced with a $500 loss, but you're only comfortable losing $100, there's a good chance you're going to hang on to that stock and it's going to go lower and lower and lower, and your $500 loss turns into a $1,000 loss, and now you are 10 times what you are willing to lose. So it's really important to have good risk management. All right, next thing on the list is an unproven strategy. A lot of people don't even have a strategy coming into the market, and it's very important to have a strategy that is based on data. So your strategy shouldn't be gut feel or listening to some guy on the internet or girl on the internet or following what news releases say, that sort of thing. You need to have a strategy that you test over a large sample size of trades. So, anyone can get lucky on a trade or two, but that does not drive a strategy. If you have a set of rules, and let's just say you buy when one moving average crosses over another, provided the stock is under $5 and above $1. I mean, that's not a good strategy, but let's just pretend that that's your strategy. Well, then you have to go and test that over hundreds, maybe even thousands of trades to see if it actually works. You see these big screens behind me. I spend a lot of my time testing strategies, looking at hundreds and hundreds of examples of where certain indicators that I've created align to create a set of rules and drive a strategy. And I test that, and if I find that it works over many, many trades in the past, then I forward test it in real market conditions and see if it works. And those become the strategies that I actually trade and that I teach others to trade. You can learn more about what I do at stockscores.com, my website. All right, so let's get into the next one, which is a lack of discipline. So this is just a sad reality. Most people have fear and greed, and that fear and greed will cause them to not have good discipline. If you say I'm buying a stock at $5 and it falls to $4.80, that's my stop loss point. Well, you have to have the discipline to take the loss when it falls to that point. And that seems really simple and obvious, but the reality is, because most of us have an emotional attachment to money, we don't like to lose, we like to make it, we are going to likely not take the loss when it gets there. This is what normal people do. And to be a good trader, you can't be normal. You have to be a little different than most people. All right, back to the list. Lack of emotional control. So I said earlier that most of us succumb to fear and greed. Fear causes us to either worry about missing out on a trade, so we'll take marginal trades because we have the fear of missing out. I talked about that in, I think, one of the videos I did last week, and you can see that on the Stockscores YouTube channel. And then, of course, you have the fear of losing. You have the fear of a winner turning into a loser. So sometimes you'll sell a good trade too early because you don't want that winner to turn into a loser. All of these emotional traps exist because, again, we have this emotional attachment to money. Now, to get over that, you have to have a plan. You have to have a written plan, and it can't just be, in your head. It has to be a written plan that you have tested, that you believe in, and then you have to have the discipline to follow that plan. And the second thing for emotional control is to not take more risk than you are comfortable with. If it bothers you to lose $500, then lower your position size so that if you have to take a loss, it's not going to be bigger than what you can tolerate. And everyone has a different number. When you're starting out trading, your number is going to be a lot lower than it will be once you're an experienced trader. You might start off with a risk tolerance of $20 a trade, or even practicing with no risk, just paper trading. And then, trade with $50 of risk. Get successful at that level. Get desensitized to your emotions. And then you can increase the risk to $100 and then $200. As you're successful, increase your risk tolerance to keep your emotions out of it. And of course, have that written plan. All right, next thing on the list is single trade focus. Now, most people think about what just happened as an indication of how they're doing. And so let's say your last trade was a winner, you're going to feel like you're pretty smart. Last trade was a loser, you're going to be frustrated, you might start to get a little panicked, your emotions arise, and you're going to start to take on a gambler mentality. And so what's really important is to not think of trading as one trade at a time, but rather think of it as one long continuous trade. You buy this stock, you sell it, you buy another stock, you sell it, you buy two more over here, you sell them. It's one long continuous trade. And the reason we do that is because trading is not a perfect game. As I said earlier, you're not going to be right on every single trade. Some of them are going to be losers, some are going to be winners, and after 100 trades, you can evaluate whether you are effective. And if after 100 trades you're right 70% of the time and you're wrong on 30, but your average profit is double what your average loss is, now you've got a proven strategy that is effective over a large number of trades. Don't worry about single losses or single profits, they're meaningless. What happens over a large number of trades? And think of it that way so you don't get so bothered when you have to take that loss, and so you don't get so euphoric after you make a nice winning trade. All right, next on our list, the quest to be perfect. So some of us, not everyone, but some of us have this desire for everything to be orderly and perfect. If you come from an accounting background, an engineering background, you're probably more likely to want everything exact, right? And the problem with that is trading is a bit of an art. It's not all science. And so we have to understand that there is this fluidity to trading. You might get 4 or 5 losers in a row just because of market conditions on that particular day, let's say. And then you might have a real hot streak because the markets are strong and you're in the game and you're sharp, and that's going to make you feel real good. Well, you have to level all that out and make sure that you are consistent in how you apply your risk, how you apply your strategies, and just keep it simple. Don't try to be perfect. Now, the last one, over trading. I often tell my students, you make more by trading less. Now, why is that? Well, if you trade less, if you make fewer trades, then it means that you are being fussy, that you are being very selective in the trades you take. You're not taking marginal trades. When we look at opportunities that come up through the day, there's some good ones, there's some great ones, and there's some not so good ones. When I'm running my webinars every day for my students, I give my trade candidates a score. I'll say, well, this one's a 6 out of 10, which means I think it has a 60% chance of working. And I might say, well, this one's a 7 out of 10. I think it has a 70% chance of working. 6.5, 65% chance. So there's no trade that is ever 100. There's no 10 out of 10 because there's no perfect trade. And that's how you have to think about the market is you want to be fussy, don't try to be perfect, and make sure you don't overtrade. Don't take those marginal trades. You can make more doing 3 trades a day than someone who maybe does 10. Now, someone who does 10 may have a strategy that if they follow the rules exactly, gives them 10 trades. But if that person who should be taking 10 trades a day, because those are the ones that meet the rules, is actually taking 30 trades a day, that means they're probably taking 20 trades that really don't meet their rules. So that's the key. When you are trading, you have to be picky, wait for the right trades to come along. The reality of trading is you spend a lot of time waiting. I'll sit down sometimes and early in the morning because I'm on the West Coast. And so for me, the pre-market session starts at 4 in the morning. Imagine getting up at 4 in the morning, sitting from 4 till 5 and doing no trades, thinking, well, I could be in bed right now, but I'm just sitting here waiting. Well, you might want to just take a trade just to do something, and you end up taking a marginal trade, and that leads to losses. All right, so that's a quick list of some things that I think are common mistakes. If you want to learn more about what I do, go to stockscores.com. I'll just show you something here. I've got a free email newsletter that goes out every week. It's free. I give trading tips, I give some stock picks, and if you go to the stockscores.com website right here, just sign up for that. It's a free weekly email. I don't send you a bunch of spam or garbage, and I think you'll find that quite useful. And the performance of my stock picks has been pretty good as well. If you've enjoyed this video, do me a favor, subscribe to the channel, hit the like button, leave a comment on some of the mistakes that you make and how you overcome them, and I think we can all help each other out that way. Hope you've enjoyed it, and trade well.